And in this session, I'll talk to you about conditional order. And after conditional order, I'll show you some charts of the past week and some setup for the next week. And at the end, as usual, I'll talk about 4 markets indices. I'll show you the charts of the weeks, how they progressed, and what are the support and resistance level for the market. So when I reach at the support and resistance level, you may want to write it down because it will help you stay on the right side of the market. Support and resistance. My support and resistance levels are very accurate, highly precise, and you must pay attention to it. So take a note of those support and resistance levels. However, support and resistance level change also, but you should see the market reacting to those levels. So that's the point. You need to know that market can react at that price level. So what are those support and resistance levels? You just take a note, and during the market hours, during the week, just pay attention and understand which market is the leading market, which one is lagging. So understanding conditional orders. All right, so this is very important. People ask me questions daily. So based on those questions, this is the presentation. So what is the objectives of conditional order? The objectives of conditional order is to eliminate greed and to enforce discipline. So enforcing discipline is very important in trading, especially when you are trying to exit from the trade. How many times we see the stocks moving fast in our direction and then we miss taking the profit? I'm sure it happens to all of you, and it happens every week that you miss taking profit, because when the stock is moving fast, you think it will go up further, and then stocks react to a certain price. It's like magic, and it starts pulling back. Boom, 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 it comes down. And you are trying to say to yourself, it will come back. I'm sure it will come back. I will take profit tomorrow. I'm sure. But that thing never happened. And sometimes the whole trade where you have a big profit, like 100% gain in your option trading, that profit can become into 100% loss. So I'm sure you have seen it and you will see it again. So eliminate that problem with this conditional order. So eliminate greed. That's when this thing, kills us, greed, because we think the stock is going higher. It doesn't, it stops. So and enforce discipline. So let me explain what is the scenario and then how you can set the conditional order. The conditional order, I've been using it for last 10 years. I found it out, that was my problem. So in trading, there's a problem and then there's a solution. So if you know there's a problem, what is the solution? So you go and look for the solution. I didn't hear anything anywhere about conditional order. Now people talk about conditional order. So just they call it, sometimes they call it activation rule. In TradeStation, it's called activation rule. And Interactive Broker is called conditional order. So that's when I learned on Interactive Broker. I call them, I say, this is my problem, is there a solution? So they said, yes, we have a solution. So I learned about conditional order. So let me explain about conditional order, and it's very important for you to learn. And your life will be easy in trading, and your profit will go up. And the other thing is the morale. The morale goes down when you miss the profit. It affects the whole day, and it affects for many, many weeks, because you saw a big profit and then you don't see it anymore. So let's talk about the scenario. So let's say you're bullish on Apple, and the current price of the Apple, suppose, is $150, for example. And the target price of the Apple you think is 155. So you did the analysis, you said, okay, I have a 5-point potential. And you buy July 150 calls, and you pay $3. So you paid $3 for July 150 calls. The target is 155, price is 150. So you have many options to sell this Apple call. One option is, there are three ways to sell your Apple calls. So one is predetermine a profit objective of 40%. So on average, you make 40% profit on the trade. Anytime on average, sometimes you make 30, sometimes you make 60, 70, 80, average is 40%. So if your average profit is 40%, it's prudent to set the sell order at 40%. Since you bought at 3, you calculated average profit 40%, the price should be 420. So you can set the sell order at 420 and let it hit. But there is a drawback to this method. It may go to 415 and your order is still out there and you never execute that. So 415 is sitting there, 420 never gets executed. So that's the drawback. It can go to $5. That's another drawback. And you calculated wrongly, you got out at 420. So this is what, stock can go higher and you are already out. Another way, the right way of doing selling your option is based on the stock target. So your target is 155. So you set the sell order at 150. You sell your option when the stock hits 155. So you're a full-time trader, you're watching your charts, you're watching Apple to go 155. As soon as it hits, you execute your sell order and you're out. So that's one way of doing it. It's okay. Third is calculating option price based on a stock target. So third way of doing it is when you say, okay, right now its stock is at 150, my target is 155, I bought the option at 3, I need a formula, I plug in and I calculate, and Apple should be trading at $5 when Apple hits 155, so I should set the sell order at $5. Now the drawback is the formula, the variables change because the option formula has 5 variables. It changes, the delta changes and other variables change. So you may have the formula has calculated $5, but maybe the option was trading at $4.90 when Apple hit 155. So your order will stay there, it will never get executed. So that's the problem. So you see the problem is you calculated 40% average profit at 420, you try to sell, it hit 410, 415, never got executed. You were watching Apple try to sell at 155, but you thought it will go to 156, 157, all the way up to the moon, and it did go up above 155, then it pulled back, and it pulled back furiously to the downside, and you were unable to sell. Maybe you were not watching your trade, and now Apple is trading at 151. So you gave up all the profit. So there's a problem with this kind of setting the sell order. There's a problem here, calculating option price based on the stock target. You can never be calculating rightly what would be the option price based on the stock target because the variables change. You have to be conservative. If the formula gives you 5, you have to set 470. And even then, you can be wrong. So you have to calculate every day. So there's a drawback here. So all these 3 ways of selling, it has a drawback. So what's the solution? So this was the solution I was looking for, and I found it. So this is the flaws I talk about. Profit objective of 40% may never hit. Calculation of option price based on target price cannot be accurate, right? Selling option when a stock reaches target requires monitoring and discipline. This is the biggest drawback. So when the stock is hitting, a lot of time, like 80% of the members or traders, they don't sell it when the stock hits the target because they become greedy. They think, okay, it's gonna go up. They are not disciplined, so they don't sell. And when they sell and the stock goes up, then they beat themselves up that I left too much money. So they are never happy. I left too much money on the table, or I didn't sell because I thought the stock would go to the moon. So they are never happy. So what we need when the stock hits the target, our option should be sold automatically. We are not involved in making the decision at that time. So we should not be involved in making the decision when the stock is hitting the target, because we have done the homework. So we should stick to our homework that we said that we will get out when we thought we will get out. So we need to get out to remove greed and to enforce discipline and freeing up time to trade other stuff. So if you are involved, if you have 10 positions open and you're involved in all the 10 positions and watching all the stock to hit the target and then you sell, you are unable to focus and concentrate. So once you enter the trade, you know the target, you set your, just like you set your sell order for a stock, you have to set the sell order for your option based on the stock target price so that you can focus on other trade and other stuff. So the benefits of conditional order. The benefit of conditional order is the conditional order is set and forget strategy. So you set and forget. You have 10 positions, you set for all, and then you forget about it. You can monitor it, you can change it, you can always revise your order, you can up and down, but at least at that time when you enter, same time you put the exit strategy. The conditional order puts money in our account automatically. So the beauty is the stock hits the target, your option sold, and your money comes back in your account. Conditional order removes greed, because this is the main thing. It removes greed. This is what kills us, and it enforces discipline. And finally, conditional order allows us to take our dog for a walk, because when we are taking our dog for a walk, that's when the stock hits the target. And when you come back, the stock is back at your entry point. So when you're taking your dog for a walk, make sure you set your order to sell. Otherwise, don't take the dog for a walk. How conditional order works for calls. So the conditional order for calls and conditional order for puts. This is what you need to do. It's easy. Just practice on your broker platform at one contract and make sure you set it up correctly. You may want to call your broker, tech. They guide you while you are on the phone to make sure you're setting it correctly. Once you set up correctly and you see it working, then you just follow the rule and practice. Even though if you have 10 contracts, you do set up for one contract, because if you make some mistake, then you can get hurt. So just do it for one contract, and then you do it later for all 10, 15, 20, whatever you have. So the way conditional order works for calls is like this. You are telling your platform to sell my Apple call contract at market price. So at market price. When Apple stock price is equal to or greater than 155. So you are telling your platform that sell all my Apple contract, whatever is the market price at that time, when Apple reaches equal to or greater than 155. So there may be a, usually we assume that the stock is trading normally and the bid and ask is normal. And it's a normal market. If there's an abnormal market, and you may sell at a lot less price, because the stock is just going through the roof, it's fluctuating, it's all over the place. And when the stock is all over the place, sometimes you just get stuck. You are not able to sell because you chase. Suppose the stock ask is 5 and the bid is 490, and you say, oh, bid is 490, there's a 60 cents spread, let me shave some spread. So you try to sell at 510, and then the bid goes to 480. Then you say, oh damn, 480 now, let me try to sell at 5. So when you try to sell at 5, the bid is at 460. So you're chasing it. So get rid of all this craziness. Everything sold at 155. So if the stock gaps above 155, you will be sold. As soon as the stock hits 155, your option will be sold for calls. So now you have to consider these points. Order is set at market, not at limit. So whatever is the last price option is sold, that's where your order will be executed, not at limit. So when the stock hits 155, whatever is the market price, and the market price is the last price, you are out. The condition is greater than or equal to for calls. So greater than or equal to, meaning 155 and above. So if your order is set for 155 and Apple gaps to 160, so Apple gaps to 160, now whatever is the option price at that time, you will get that. And when Apple is trading at 154.90, your order is not hit. 154.99, your order is still sitting there. As soon as Apple hits 155, your order is executed and you're out. And for the put side, less than or equal to condition. So on the call is greater. For put, less than or equal to. So on trade station, there is a greater than and equal to sign. Not sign. They have word equal to or greater. So you use that. There's an activation button. You first select the activation button, and then you select from the drop down. You select the condition and set it up. And you test with one contract. So you do have to test with one contract. It's important. You set it up, and in the morning when the market opens, the bid, and if early morning you see that your stock will gap up or gap down, if you have puts, and the stock will gap up if you have calls, it's prudent to cancel your conditional order and see what the stock is doing, and then you set the conditional order. So when the stock is normalized, you think, okay, it's normal, and you're watching it, then you set the conditional order. So I'm assuming in the market, when the market open, if you're watching it, then you don't need a conditional order, but you have to be disciplined at that time very strongly and sell it yourself manually. This is when you are taking the dog for a walk. It works, and to eliminate greed. Most of the time, to eliminate greed. And the most important is when you are running out of time in option. When you are running out of time and you have contracts left and you bought like 50 of them, only 3 days left, and option is giving you 100% profit, greed sets in, you don't sell, and that 100% profit becomes 100% loss. So when the time is not on your side, must set conditional order. So now setting conditional order for puts. So you're bearish on Apple now. So again, the current price is 150 and the target price is 145. So now the target price is 145. Before on the bullish side, the target was 150. So you bought July 150 put and you paid $3, right? So you paid $3. So how you will set the conditional order? You will say like this, sell my Apple. This is, I'm wording it in English, but when you are setting up, they have a condition. Every broker have a condition. So you just select the condition, greater than, equal to, etc. So, but in layman term, in caveman language, this is what it is. Sell my Apple put contract at market price when Apple stock price is equal to or less than 145. So this is the condition. Changes with calls, less than. In calls, it is greater than 145. So as soon as Apple hit 145 or less, your contract will be executed and sold, and you will be relieved that you made some money. Try it, it works. And how many times I tell you, when I don't put conditional order, I regret. I seriously regret. And I know this and I teach this, but I regret when I don't put it, and I beat myself. Oh, so I didn't change. This is not, next webinar is not on January 28th. It's on March 5th, 25th. So this is another presentation I did not update. So don't worry about it. The next is March 25th. So this conditional presentation is over, and I will open another presentation on the stocks. So just a second. And you should see my screen. So in this presentation, I will talk to you about the stocks of this week. So I will skip some slides. I talked before, so the theoretical thing I will skip. So you will see me going, skipping a lot of slides. I will talk about this topic later So I'm skipping a lot of slides. It's all theoretical. Yeah, let me talk to you about my promotion. So it's promotion time. If you don't want to hear, you go and get some drink. I have a swing option trial offer for $17. And if you're interested, you can go to this page, swing options trial offer. Take a trial for $17, but it's only for those who have not taken the trial. So only take the trial when you have not taken the trial. $17 for 2 weeks. All right. Or you can send me email at askus@financialmarketwizard.com. I have a 6-month coaching program, which is starting tomorrow. This coaching program is booked. I'm not taking any more. The next one will start in first week of October. So if you're interested, send me an email and we will talk for an hour or 1.5 hours about the program. So tomorrow the coaching program is already booked and no more enrollment. Okay, so now I'm showing you some charts. So this chart is Alta Baba. So I show you what I find and I trade. And trading is all about supports and resistance. So if you can identify support and resistance correctly, you take the trade and leave the rest on the trade how it plays out. Use just to stack the probability in your favor and see what the trade is doing. Based on your experience, the trade should work because you have done it before many times. So AAPL, when I took the chart, it's 10:08 a.m. This is what I saw. Resistance is hitting the resistance level. It's trying to move up and it's hitting the resistance. And I don't know what happened next, but you can look at AAPL. I took it on 14 March. So if it's breaking this line, it's telling you that it wants to go up, and especially it's below 50-day. It's above, just sitting above 50-day moving average. So I didn't look at on 16th of March. This is what I prepared. So sometimes when the stock comes in my radar, I just put it on my watch list, and then I see, okay, this one looks good. Let me take the trade. And if it doesn't look good, okay, I ignore it, but I just keep it for a few days on my watch list. So that's the way we need to do. Keep it on the watch list in case the stock is moving in the direction you thought it will. This is Apple. Now Apple will go to 200. You can write it down. Apple is going to $200. So Apple, we trade Apple and make money. This is a V-shaped reversal, you see. So now Apple on 13th of March is sitting at support here, 179. This support line doesn't mean this is the ultimate support. It's just that you know that stock will react to this support because this is resistance here. It will react here. So you need to find the reaction prices or the points where the Apple can react. So Apple can react here. So I know that, and it fell. It's here right now. So if I drew this line, now I know this 182 is the resistance. So it's just sitting at 178 and 179 level. So I'm watching Apple, and based on another techniques, Apple is expected to move towards 200 level. So if Apple is supposed to go on 200 level, then the market should be going up. So just keep Apple on the radar, and Apple is going to 200. So it's free tip. Next, everybody should have Apple in their portfolio in some shape or form. Maybe one share, maybe 100, maybe 1,000. It depends on your portfolio. You must have Apple in your portfolio, and 200 is the target. This is the AVGO chart I showed you last week, and I will show you what happened. So you see when AVGO, this is the very bullish candle. So when you see this kind of candle, it's called piercing candle. This is very bullish. And when you see that, you know that the stock will eventually move up. The probability is very high. So AVGO was trying to penetrate 200-day moving average. That's what I saw, and I sent the alert on a end of day service. I have another service called end of day. And this is what happened, ABGO. You see, after facing resistance of 200-day moving average from the low point, it start to break above and it gapped up. So this was the exit. So when you enter here and then you see gapping up here, that's the exit. Especially you need to watch the pre-market and after-market level. So if the news comes out after market hours, like it did in a video, you need to watch the after-market hours to see what the stock is doing. So in after hours, it was trading at 275. So during regular session, it needs to trade above 275. So you need to watch after hours and pre-market hours. So after hours, it was trading 275. So that's the line you need to draw. Okay, it needs to trade above 275 when the stock gaps up. So it did not. In the regular session, it did not. And then it pulls back to 254. So the buyers were here, right here. The buyers were here on this day and got sold off here because the deal didn't go through. This is AXP chart I prepared on 16th of March on Friday. So it looks like AXP wants to go up just based on this candle. The reversal, it took last 2 days of candle. And next move is a bullish move. Baba, we trade Baba a lot. And I showed you the chart last time that Baba is long. I did mention, showed you the chart. This is what I showed you, that this is the support line. And Baba was sitting right here. And if the stock is sitting as support, let's say, and then it gaps up. So if it's sitting as support, is testing the support and it gaps up, that's right away is your buy signal. So this was your buy signal right away. Gap up from support, gap at 50-day moving average, closing at 50-day moving average. So you look for one signal, then another signal, then the third signal. So you just keep looking at the confirmation. Okay, it was sitting as support. Now it gapped up. What the market is doing? Market was bearish, but the Baba is bullish. So why Baba is bullish? Okay, then Baba is sitting at 50-day moving average. Is it holding 50-day? Yes, it's holding. Did it close at 50-day moving average? Yes, it closed. All these adds up. It's like points, like 2 points for this, 3 points for that, 10 points for that. It's add up, so you need to make decisions. So right at the go, we bought the Baba calls. So somebody knew the news coming that it will be listed in Chinese stock exchange. Right now, it's listed in US. So somebody knew the news is coming. Otherwise, why it gap up, right? And the news came. So then I showed you the chart again. It's trying to break this resistance. So when you see this resistance, it doesn't mean that the stock will just come down. It will, it can, but you have to put the odds in your favor. So you are long here. It stopped here. So it's called stalling. So it is stalled right here. So it's okay. You know why it stalled. Then again, it's stalled. It's trying to penetrate, right? You see that? Penetrating, trying to. Then it moved up, right? So it broke above another little gap. It came down, sitting at 50-day moving average. It's still okay. You're still in the trade. And then this is where the news came. So the news came, and early morning, the news came, pre-market hours on 15th of March. So I watched the pre-market. Now, our job during pre-market hours, if you're in the position or not in the position, you need to watch what the stock is doing in pre-market hours. So Baba was trading at $200, $200, 250. So if it's trading at 200 and 250 during regular session, it need to trade above. Otherwise, you need to exit. How many times? So I send the alerts, take your profit. We took the profit. Then Baba pull back. You see Baba pull back, and then I receive alert from the members. Oh, Baba is going up, back up. Should we get back in? So you have to know all this, what it did in pre-market hours, what it did when the market opened, etc. So don't get back in. Just wait for Baba to come down. If Baba comes down right here somewhere, 195, 194, and start reversing, then you get back in. Otherwise, just leave Baba alone. Baba is done because they bought it here. So those who bought it here, they knew the news. There's always the news leaked out. Imagine Baba news is that it will be listed in Chinese exchange, so China exchange. So nobody knew about this. Somebody knew about it, right? It's not completely 100% secret. Somebody knew about it, especially from China. So they just bought it, and here they sold. So they made money. They bought it at 175, and they sold at 200. Imagine 25 points if they bought 1 million shares, $25 million. Okay, BA. So BA hit this top, right? So whenever a doji is formed, right here, this is called doji candle. So doji is formed at resistance level, the stock reacts. We saw in NVDA, it reacted, same pattern. So BA fell at the support, right? So this is the support line. This is the 50-day moving average, right, sitting here. So you say, okay, I'll go long if BA moves up. So he said, okay, let's go long. So Baba, look at the BA, how it can deceive us. So it's trying to deceive us. So this kind of saying, okay, maybe we can go long. Then this candle looks very bullish. Looks like it's really want to go up. But the thing is, it deceived. So it closed this gap here. So when the gap is closed, this was resistance. When there's a gap, there's a resistance. So it gapped up. I mean, it closed the gap. And now we think, okay, BA is going up. So it went sideways, then pull back, it's going up. So we think it's BA is going up, right? Then it reversed. So when this candle formed, this is a bearish candle. So now we are on an alert that what's happening to BA. And then it fell. So we had a long position in BA based on this candle. And then when we saw this candle, we closed the long position and we doubled down, we bought the puts on BA. And then when we saw the break, we doubled down more. So we bought BA puts and we sold right here. So from calls, we switched to puts and double down and we made money. So the BA is now resting. So now it looks like BA is resting and it could reverse the position because 3 back-to-back, these type of candles telling us that BA wants to rest now, doesn't want to go down. Caterpillar, again, the same situation. You see the support, it crossed the resistance and now it's sitting here. This candle is just saying, we don't know, we just want to rest. So cat is resting, it's trying to go up, hit the resistance as 50-day moving average. Always look for 50-day moving average to see how the stock is reacting. So it reacted, came back to support, and now it wants to go up. So Caterpillar crosses 156 and then 159 goes higher. CF, so I showed you the chart of CF and now I'll show you how the trade developed. Okay, so look at this. So CF gapped up, right? So when you are trading on gap, you have to see where the gap is taking place. The gap is at resistance level or at the support, gap down at support level, where the gap is. So it gapped up right at the resistance level. And look what happened next day. Fell, 3-day fell. So this gap got filled, fell, keep going down. So this gap failed and stock reverses sharply. So you have to be careful on the gap. Costco looks like it wants to reverse just based on this candle. It looks like it wants to go up. Cost wants to go up. CVX looks like it wants to go up. It crossed this congestion zone. So it's going up just because this. So your entry is when you see the crude is going up, the crude stock's going up, crossing the resistance level, the congestion zone, you want to go long. DE, so when Caterpillar is going up, you are not watching DE, you should watch DE. If DE you are watching, you need to watch Caterpillar. So you have to watch Cat and DE and see what's the combination, what is going on with it. If you miss one, you may want to catch another one. So DE forms had a support and is bouncing, and you see how. So find the support and go long. DAC. So you see this congestion zone, when you see like this is like crazy congestion, crazy resistance. It doesn't want to go up. So earning came, we bought puts on earning. This is earning trade. So when it was falling, we went short on DAG via puts. So now need to know the exit. So one exit is this 50-day moving average. You have to be careful of 50-day moving average because stock can penetrate 50-day moving average, then goes back up. So that penetrated 60-day moving, 50-day moving average, and then it started reversing. So we exited same day, $200 per contract. Then next day it gapped up. So gapped up at 50-day moving average. This is bullish. Bullish. So the stock which was bearish became bullish overnight. Dollar General. So this was earning play. We have earning play at 197 for three months. If you're existing member, then it's only 147. So Dollar General was bouncing from support. So when I saw that, I sent alert to my earning play service. I said buy at Dollar General for earning. And this is one of the way to trade earning. Expect the move before the earning and exit right at the earning. So this is one way of trading Dollar General. So we traded Dollar General and we bought calls and it gapped up on earning. So when it gapped up right at the 50-day moving average magically, like as in magic happened. I don't know how, but the magic happened in the stock market every day. And it gapped up right there. So somehow it knows that this is my 50-day moving average. So as soon as it gaps 50-day moving average, you need to sell. Well, you know it can happen like this. So I send the strategy alert pre-market. This is the levels you need to take profit. So we took great profit on Dollar General. Now it gapped down. I mean, now it pulled back, right? So you need to keep watching and see what it will do next. So this is what it does next. So this is a bullish sign. The Dollar General wants to go back up, and especially when it crosses 50-day moving average. It can come down to fill the gap. There's another path, right? That you can say, what about it can fill the gap? Yes, it can, but the gap needs to be filled quickly. Looks like it's going up. This is a DIA chart. So this is a spiral, Dow Jones. So we trade in index service, we trade DIA, QQQ, and SPY, and we make a lot of money on index service. It's 207 for a quarter. You can sign up on the website, 207 per quarter. We send 2 trades per month and make too much money. One trader makes 55,000, 38,000, 25,000. They are big traders. They make that much money per trade. So this is a DIA, and we trade DIA, QQQ, sometimes SPY, sometimes both. Sometimes one we close, sometimes we keep it open. So you have to know which index is hitting resistance, which index is the leading indicator, acting as a leading market, which one is the lagging. If suppose something is lagging and it giving you entry, you go with that. If somebody is leading, you need to follow that market. If some stock market is bouncing off support and have a great potential, you need to go with that. Some market hit the resistance level at target, you are in the position, you need to take profit in that, rotate your money into another index. So you need to do all these magical tricks during the market. So you have to know all the market indices, 4 of them, Dow Jones, Russell, NASDAQ, and S&P. So you need to know where they are, what are the resistance level, what are the support level, what are the target, which one is leading, which one is lagging, who has what is going on, which stock and which index has a great potential. Does Apple have a great potential? If Apple has a great potential, which index it's part of? So if Apple is going to 200, then which index I need to buy? All that you need to calculate and then play accordingly. So DIA is bouncing off 245, 248 level. So now you pay attention to DIA. Same you can plot for SPY, NASDAQ, IWM for Russell, QQQ for NASDAQ, and play accordingly. So for that was for DI. We trade FB a lot and we make money because FB, Baba, Baidu, Apple, Home Depot, Lowe's, Caterpillar, John Deere, these are the stocks which moves, right? So you need to keep FB on your radar all the time. So FB bouncing off the support, right? So we said, okay, we will go long. So we went long just based on this candle. There's no magic, there's no indicator. You see any indicator in the chart? There's no indicator. I'm not hiding any indicator. I'm just showing you my charts. So this is core and price analysis. And if you master that, then you're independent of any platform. You can trade on any platform because every platform has these charts. And then you draw the line and make your decision based on your past experience. So FB, when it hit this, we said, okay, take profit. So we know 50-day moving average acts as a resistance. So we took the profit. Now we need to keep watching FB because it can go break this 50-day moving average. So we know that. And we went long. You see FB breaking above, FB going up, FB going up. So FB is long. It's now 50-day moving average is the support. So 50-day moving average is support. We need to go long on FB. And it depends if you have stocks or if you have options. If you have options, you take quick profit. If you have a stock, you just keep holding. So it depends. I tend to keep both. Sometimes I liquidate stocks and option both. Sometimes I just keep holding stock. I sell option, then I buy stock again. In a long term, I have a stock for forever. So it depends. FSLR. So FSLR on Friday gave this indicator. So when you see the stock breaking out like that, you need to go long. So it took out this condition. So it went up, 3 days of sideways move, boom, new entry. This is a new entry. So you need to go long on FSLR. GPS, we traded GPS with puts. So this is based on this candle. So we saw, okay, GPS is coming down like that. We need to go buy a puts. And we need to see if it's break the 50-day moving average and break this low of this candle. So we know 2 levels to watch, 50-day moving average and the low of this candle and the filling the gap. So window open, window close. The window is open, window needs to be closed. So we know all this, right? 50-day moving average. Then the next level is this low of the candle. Then we know this window needs to be closed. We know if you draw this line, it's at 32. So when we know all this, and we know that if it goes above, then our trade is not valid anymore on the short side. Once we put the trade, then we watch. So this is what it did, right? So it says, okay, 50-day moving average breaking is testing this low. So some trader wants to go long on GPS because of this low. So it's okay, but you are still holding. It broke. So now it broke. Now you want to watch this 32. So we closed our trade. We made money on the puts. Simple based on this one candle. Yeah, so we closed. We closed it and we made money on puts. Now it broke this resistance line. So if you are still on the trade, then what's your exit? Exit is at 30. So you need to watch 30 level. If it breaks this, then 200-day moving average is the ultimate support, which is at 28. So the stock is dropping and you're following this stock action. So if you sold majority of your contract or half contract, you're still holding it. See the reaction at 30. If it breaks, see the reaction at 28. Goldman Sachs, I showed you the chart last week. This is Goldman Sachs is trying to move up based on this line, right? Support is just sitting here. It doesn't mean, this is just a warning sign that it's getting exhausted, but who knows, it can go up. So I showed you the chart, watch GS, and you see what happened. It went up, went up. So Home Depot, I showed you the chart of Home Depot last week, saying it's trying to penetrate to the upside. You see, there's a resistance line here. So you know 180 is the resistance. So you just watch for 180 break. And here is the support level. So this line, you can draw a line here at 175. This is the support. So when you know this is the support and you know this is the resistance, so what you need to do, just watch and see which side it breaks. So it's trying to break. It's still going through here. If it continues to go on the sideways for many days, then it can easily break down and it can come down to 167 level. So it can, or if it breaks to the upside, then it's going high. So right now, Home Depot is just on a neutral side. Intel we traded many times, made money. So Intel is a very super bullish stock right now. And I just bought Intel 8700K processor. So if you go to the store, they will say they have an 8th generation chip. So it's very powerful. I'm building a new computer. I bought a processor just 2 days ago. Intel is trying to break. So this is the resistance line. it bounces off. Oh, just a second. So what it did, so it's sitting here right now. So if it goes, this is 16th of March. So if it goes like 50 here, touches and rest, and then reverses, then Intel will give you the entry to the long side. This is JD. We traded JD just based on this candle, and I showed you the chart of JD last week. So after bouncing off from 200-day moving average, it's acting as support. This gave us a very solid bullish, and I sent this alert to one of the servers, and we went long, and we exited right here. So we made money on JD. KMX, I don't have any position. I'm just showing you that looks like it wants to go up. CarMax. So it wants to go up. So keep an eye on KMX. KSS. So KSS is bouncing off 50-day moving average. So KSS looks like wants to go up. Here's the resistance. Again, it's just hugging the resistance line. So if it breaks above, it's going up. And then the resistance line is at 65 right here. So next is 65. So keep an eye on KSS. LLY is also bullish. This is the resistance line right here. So when it's break above 80, it's supposed to go above 50-day moving average. See what it's doing. Then 200-day moving average is another resistance, 81.74. So what LLY doing? LMT, we traded LMT just because Boeing was also going down. So I said, okay, let me watch LMT. So LMT, we bought the puts and we just waited for it to make a down move. So this is the congestion level and it broke 50-day. They said, okay, we're going to buy puts. And this is what happened. We exited with good profit right here when it started doing like this. So now it's resting. We don't know what it will do next, right? It can easily come to 309 level or it can go up. So next move, we don't know. McDonald is super bullish. So I send McDonald alert to a lot of time to my Thailand clients. They like to trade McDonald. I have a separate service for them. So this McDonald is bullish. A window open and then we know window will be closed. So McDonald is trying to close the window. So we went long on McDonald in end of day service and Thailand service. And this is what happened. See, window open, window got closed. So how fast the window got closed? Window gap down on earning, I think this was the earning, and then it closed. So after gapping down, when the stock starts doing this, you need to take your chances and you go long. And then you know the window will be closed. The window got closed. Now it's hitting a 200 support. Resistance, 200-day moving average resistance. Now it's crossing on 15 March, it's trying to cross. Oh, it crossed. So it crossed, right? I trade so many, I forget what it did. So it crossed. You see how the trade developed? It gapped down, right? So the big boys bought here. Big boys bought here. The retailers are buying here now. They talk about on CNBC, McDonald's is bullish. We see some option activity. We should go long on McDonald's. So McDonald's, they got here. Window open, window closed. Now it's way above. So if they bought at 147, 148, 149, 150, it's trading at 162. 12-point move on V reversal. You see this V reversal? How fast? So all these guys who thought that McDonald's came up with bad earning, these guys don't think. If you go to any McDonald's near my home, they have now 2 driveway, and the driveway is all the way like miles long, two driveway, and McDonald's is full inside. McDonald's is full outside. The long line, and their prices are so high. Breakfast is like $8. They give you little egg muffin sandwich and one little hash brown with little juice, $8. So they're making too much money. MMM, see, MMM has found pennant, it's trap, right? So now you need to watch which way it will be resolved. So you just watch MM, it breaks this way or that way. So chances are it's trying to break the above 50-day moving average. And when it breaks, you need to go long. This is MU. MU is super bullish. We gave entry here. You see this hammer candle, it gave bullish entry here. So if you have a stock, you just buy stock. If you have money, you buy stock. This is your ultimate buying signal. And you go long. MU is, since then, it's long. It just keep going up. PayPal, I send the chart for PayPal. I send during the daytime, I send the alert via email. I send the alert on a Facebook. PayPal is long, and this is what happened. PayPal is long, it's going up. It's window open, window will be closed. So this window, always look on the left side. When you look on the left side, you will know what it will do on the right side. So look on the left side, figure it out what it will do on the right side. The right side is the future, like you have a crystal ball. So your crystal ball saying that it will be closed. So you can say, PayPal is going to 85, 86, my crystal ball telling me. And then when PayPal hits, PayPal make a lot of money from me through commission. So I like to trade from PayPal. They make too much money. PayPal, so it's just going up. So PayPal makes too much money. When you go to all these stores and they're making too much money, that's when you just buy those stocks. You see long line in McDonald's. McDonald's kept down. You say, oh, McDonald's, I need to buy McDonald's. Driveway is full and inside is full. Their breakfast is $8. I'm gonna buy a McDonald's stock. Qualcomm. So Qualcomm, I showed you the chart, right? So it dropped below 50-day moving average. So I said, okay, this looks like it's a short position, if you remember. And there is a window here. Window open, window needs to be closed. You see how window got closed? Qualcomm falling. So Qualcomm falling because of the Broadcom news, and it just keeps falling. So when it keeps falling, then you need to know where it can stop. It can stop at 200-day moving average. It made a hammer. Now, where the big boys are coming, big boys already came here. This is the big boy buying power, the dinosaurs. They are here. Me and you cannot move the stock up like this. So they are the one. So you need to follow them and hold, make money. Qualcomm is long. It's not short. QRVO, I was watching QRVO on Thursday. So it fell on 50-day moving average. So if you know its stock is falling at 50-day moving average, doesn't mean how bearish it is or how much volume. It can hold the 50-day moving average, and it will just stop going magically. So watch McDonald's, QRVO, Starbucks. So I kept telling you Starbucks going up, right? So when you go to Starbucks, they sell you drink $5. I had a $500 card, gift card, Starbucks. And yesterday I went and I gave the card. They said, sir, you have 8 cents. I said, 8 cents? I had $500. They said, you used it all. If you want to check what you bought, go online or call customer service. There's only 8 cents left. So I don't know how I spent that $500 in Starbucks. So I have 8 cents. Somehow I feel somebody stole my $500. So nobody stole, it's me. Keep going to my Starbucks, buying frappuccino and coffee and whatnot. Their bananas and those croissants. So I spent $500 recently in Starbucks. There's 8 cents left. So when you know that you spend $500 and there's a long line, sometimes the line is so long. If you go Santa Monica, Starbucks, there's a long line. If you go Thailand, there's a Starbucks, there's a long line. China, everywhere, even in Forbidden City, there's a Starbucks. So when you know that, so you follow Starbucks and window open, right? Here, window open, window closing, window. You see how window got closed? Window open, window closed. Magic happening, right? So when magic is happening, you need to participate in the magic by accumulating the contract. So sometimes the traders say, I bought this at 40 cents and I sold the option at 5 cents. So what went wrong? Why did I lose money when the Starbucks made such a move? So if you buy an option at 40 cents, what do you expect? If the Starbucks moves $1 against you, your 40 cents contract will be trading at 0 cents because it's 40 cents. So when it's 5 cents, you need to accumulate more and then keep watching Starbucks and accumulate more at 10 cents, at 15 cents, at 20 cents. Keep buying, keep buying, keep buying. Build your position like 200 contracts. Even Starbucks doesn't know how many contracts you got. And then you go and buy the card. So Starbucks, see, window open, window close. This is what Starbucks did. So if you bought at 5 cents, instead of losing at 5 cents, this contract was trading at 90 cents. So on this day, so 5 cents contract trading at 90 cents. So when you see this move is coming, boom, 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 up, you see on the left side, you say, okay, on the left side, Gap is, window will be closed. Window open, window closed, window got closed. So the trade is over. Now, if you're buying a Starbucks right here, you're too late. They bought it right here. You see this candle? This is the ultimate entry. This candle. This was the entry. All along, Starbucks kept telling you, you need to buy me. You need to accumulate me. This candle telling me you that you buy me, you buy me, you buy, close here. So all these guys who sold Starbucks on the earning, that earning is bad, they don't go to Starbucks store. They don't go and drink Starbucks. They inject their own theory. This is UNP. This is the UNP chart, right? So this is right as support line, this long line. So when you see like this, again, you decide yourself, okay, I go long. If it breaks 125, I switch my position. You need to switch your train. If you take a train from Sacramento and you want to go to Seattle and you wake up and you see yourself in San Francisco, you say, why am I in San Francisco? I'm supposed to be in Seattle. So you will not sit all the way, travel to San Diego. You will switch the train and you will go to Seattle. So one way is go all the way San Diego, or switch the train in San Francisco, go to Seattle. So this is right, like here, you want to go to Seattle and you are sitting at San Francisco. So you say, okay, is it going to San Diego? San Diego is here. Or is it going to Seattle? You don't know. So whatever it does, you just take that train, and it went to Seattle, right? So it's not going to San Diego. San Diego is here. It can go to Mexico also. If it falls here, it will end up in Mexico, but it didn't. So when you say like this, you take that train and you should be ready to switch the train. So the train is going to the right direction. It's going to Seattle and it's going higher. So there's a one tiny gap here. These gap, little gap doesn't matter. The gap you need to watch is this. So this is the window open. This is the window open. This window got closed. You see that? And it's going up. This tiny window doesn't matter. All these tiny gaps happen all day, all long. So don't worry about it. Voya. So Voya is, you see Voya? Voya is trying to break resistance. So when you see this, you go long. You have to take chances. 50-day moving average bouncing up, go long. VRX. So I saw VRX. I don't trade VRX because of it's like crazy stock. It's bouncing from 200-day moving average. So I took the chart. I don't know what it did, but there's a window open. So window open, window close. Here, exit here. Another one, Walmart. I trade Walmart. Walmart, I go to buy toothpaste, etc. Sometimes Costco, I forget one thing and then I go to Walmart. So they make money too, right? There's always car parking is full. So Walmart, this is a bullish signal. You go Walmart and buy. So whatever money you're spending, you trade that stock and make money. Walmart, Home Depot, Low, Apple. If you want to buy Apple, new iPhone, you buy Apple shares. Facebook takes a lot of my money. They're making too much money from me. So I know I need to take money from them via shares. So there's a window open, window will be closed. So just watch, get the window closed. X, we trade X a lot. We made money on the long side, we made money on the short side. Now it looks like when X is going up. So you see this? This is just a simple logic, caveman trade. So when you see like that, you say, okay, I'm gonna go long. So go long. Okay, so now we're done with the index chart. Stock charts. It's 6 o'clock. So I will show you the charts of indexes. So it's very important. You need to know about the market, and then I show you the support and resistance level, and then we are done. So Dow Jones is 13. Let me see. Somebody is saying futures are down now. Let me see how much down. I'm opening the chart. So this is the problem with the traders. Let's see how much down. Is it worth even mentioning that it's down? So I'm opening my charts just to see down now. How much down? Is it like 500 points down? How much down is it, Stan? Can you tell me? Okay, so it's 48 points down. So 48 points Dow Jones down, suppose, is like nothing. Don't even look at it. So somebody said futures are down like 48 points. So 48 points, I don't worry about it. 48 points for Dow Jones is sitting at 25,000. Is like nothing. So, all right. So Dow Jones Dow Jones is hitting this resistance level, right? So if you draw this chart, you say, okay, this is hitting resistance 13 March. Now what it does? So it's coming down. So you know it can come down to 24,500. So you say, okay, let's see what it will do. So it's bouncing off. So Dow Jones is sitting at support. This candle also telling me. So it can do anything. So just watch for the next move. If next move up crosses this 50-day moving average, which is 25,300, it's bullish. This is SPX chart on 13th of March. So I said, okay, 30th March, I know this 50-day moving average is 27.45. So I just watch, see what it does. So I know the level, right? Sitting there, sitting there, sitting there. So you see how, so like this is just sitting there, 50-day moving average. Internally, the stock market is weak right now. It's choppy and weak. It's not strong, so it's weak. Nasdaq, so it's Nasdaq is this is the support line. So I say, okay, support line. Let's see what it does. So it's sitting there, sitting. See, just sitting there. Russell, another one. So it made a move. It broke this support resistance. Now it can go easily above. And this is the stock. And this is the market we need to watch. Russell 2000. We need to watch, because a lot of stock, like 2000 stocks are there, and they are small cap. They all need to go up. So this is the resistance level. So we know the resistance level is here. So Russell 2000 keep coming down. Now it's going to go up. So Russell 2000 needs to cross 1600 level. And I wrote down all the support and resistance level for you. So this is what I gave you last week. So if you attended the webinar, you would have noted the support and resistance level. You just make a worksheet, a note, diary, something you write down. And so these were the given. It broke, Russell broke the support. I mean, to the upside, it's going upside. Nasdaq is below this level. And here is the support and resistance for the coming week. So Nasdaq 69.67 is support, 70.66 is resistance. Support for S&P is 27.29 and resistance. So when the stock market is trapped between support and resistance, it acts as choppy. That's why we have a choppiness, because S&P is trapped between support and resistance level. So above 27.66 will be good. Above 70.66 will be good Nasdaq. 1610 resistance for Russell will be good, break above. So 1610, 2766, 7066, anything as so out of 4 markets, 3 are facing resistance. That's why we have a choppiness in the market. So the stock market is trapped between resistance and support. Whenever the market is trapped, that's where we see choppiness, and then the stock doesn't move. They go up, then they pull back, they go up, they pull back, and it hurts the option position. So right now the market got trapped in it. So we'll see this week what it does. And I know the resistance level, so we'll watch and see what it does. All right. So I think this ends the presentation. Again, I have $17 offer. So if you're interested, send me email only if you have not taken that offer. And the 6-month coaching program is booked, starts tomorrow. So we meet tomorrow at 5:30, those who enroll. And the program can go even longer than 6 months. The next batch will start in first week of October. So you can always book your session and talk to me. So 60-minute session. Just send me email and I'll send you the details, and we talk and see if you like what I have to offer. All right. So let me see if we have any. I don't trade weekly, so I don't know. I hardly trade weekly because I may be right, but the option, the expiry sword hanging on me, and it kills me. So I don't buy. I'm under too much stress under weekly. When window closes, so it depends how the window is open and window is closed. So I'll explain more in detail in this coaching program. I'll just give you a little bit example. So when the window is open from the top, so gap down, right? So when the stock gaps down, the window is open. And when the stock is reversing to the upside, that window acts as a resistance. So you need to watch carefully. The sellers are sitting there. So those who bought before the gap down, they want to sell because the window is closed now. They are back to the even. So they close and the stock falls down. But it doesn't close, the stock keeps going up, then it just keeps going up. So window is very important, and I will teach you in details starting tomorrow. Tacos, yeah, taco. I love tacos, but I don't need too much. What else? Yeah, support and resistance, deciding difficulty with support and resistance. Yes, it's very hard to decide how to figure out the exact support and resistance. That's the key. So you need to practice a little bit, and you will learn. Market maker always there. Market makers. There are three things you need to worry about. 3M. 1M is Mother Nature. Don't fight with Mother Nature. The second M is your mother-in-law. Don't fight with her. Your life is in trouble. And the third one is market maker. So you don't fight with market maker. So always watch for 3M: Mother Nature, mother-in-law, and market maker. Yeah, I fixed the sound problem. So there was a sound problem. I fixed it. Now it's perfect. And I don't have any more questions. So if you, let me see, somebody asked me about CMG. So CMG, I don't trade. CMG is like crazy stock, big price. So because of the big price, high price, I rather trade 3 smaller stock price than 1 big price, because if this option is too expensive and all that, unless I trade vertical calls or puts, I don't trade CMG. So I don't know about CMG. Sometimes I just don't look. I don't look at PCLN chart anymore because it's too expensive. I don't trade. It's crazy. So CMG, I have not looked at it for a long time. But if you read my previous comments, CMG bottom like at 250, I gave a 275 entry before, and it if you read Facebook post or somewhere I posted 275, but it went to 250. CMG is in uptrend, it's going up. So CMG, I had a talk 3 months ago, and this guy was fundamentalist, and he was giving me reason, and I was telling him my reason. So he was saying like this. He asked me about CMG, and I said 275 is the bottom. It did go to 250. So at 275, he was saying, people are buying CMG. I don't understand why they are buying. They have this problem in the store and that problem in the store. So CMG gave the entry at the time when it announced the new CEO, right? So they said they will change the CEO. That was the time CMG gave the gapped up, and that was the buy price. So it gapped up at 280, and that's it. After that, CMG is in uptrend. CMG is going up. The window was there, window got filled. So if you look at your chart, CMG is in uptrend and CMG is going higher. So CMG is not a short for me, and I don't trade CMG. All right. So I'll see you next Sunday. I have another meeting coming up at 7, so I have only 50 minutes left, and I need to talk. So Deepa, if you're listening, I'll be waiting for you at 7. So I'll see you tomorrow. I've been talking all day. My throat is dry. All right. Thank you very much. I'm stopping the recording, and this recording is available. So if you're interested, send me email, or you will receive email tomorrow morning with automatic email going out to you with the link to the recording. Just watch the recording. You can share the recording with your fellow traders. Thank you very much. See you next Monday, and I will cover one additional topic along with the stock charts.